Hello and welcome back. If this is your first time here, I am Dr. Stock, Doctor of Education, and in this video we're going to take a look at some stocks that I've talked about in my recent videos. So some I've talked about a few days ago, the others I talked about yesterday. There's two shorts in here, a bunch of longs, and I also want to give an update on SOFI and Tesla when we're going through these different stocks that I have. And a lot of these stocks are off the beaten path, that they're not currently hyped up right now, which makes the technicals a little bit more predictable than what we would have with the different hype that would come along, such as with just pure play AI stocks, for example. So without further ado, I'm going to be using Moomoo in this video. You can get up to 17 free stocks by using my link that's down in the description, including possibly a free share of C3AI. So I'll show you more about that later. I do want to get right into the stocks though. So let me pop that out and pop this up for you. And this first stock that we're looking at is EOG. And this is one that I was short on, saying that because we're below the moving averages, that we've recently turned bearish in this and that there is a significant amount of downside to be experienced. So if you're somebody to use put options or to short sell, this could be that stock for you. And yesterday was a very nice day in the markets, and yet look at the performance that we had from EOG. It failed to join the party. As a matter of fact, we're possibly getting more downward pressure, pushing further down, that we possibly hit this 106 level, possibly even break all the way down to the 100 level. And then if we break from that, we actually have even more significant downside that will go along. So this would be one that I'll put on the short side of things. I said that I was short on this one, and we've got this candle since, so that was on 6/14. As a matter of fact, I think I talked about it back on 6/12, maybe as recently as 6/13, but definitely by 6/14, my video had already come out. We've dropped down significantly. Yesterday, the market rallied, and like I said, failed to join the party. So far, that short is playing out, and as long as it stays under the 50-day, I think that we're really golden for keeping that downward pressure, and it currently right now appears to be in a bearish channel, so we'll see if we break down below that. Let's move on to the next stock. Next stock is ticker symbol ASO. There we go. And we look at ASO, another one that's short, down below the moving averages, hasn't hit his death cross moment yet. So this is one that I think could significantly break down from where it's at. And so for you short sellers out there, or you people who like to buy put options and possibly capitalizing on some premium from those put options, so buying them back later when this stock drops significantly, if it does, this is another option that I think is out there. One of my favorites that I have off the beaten path, and one that we don't really hear a lot about. And I think these technicals are going to play out beautifully for us. We're going to have to watch and see for ASO. And this is one that the floor could easily fall out of this thing after $47 per share. This thing could drop all the way down to $40 per share before it finally reaches another significant area of support. So keep that in mind. Let's move over to some of the longs. So one of the ones that I talked about along the same time as EOG and ASO, this one was a long play that I put in that same video. This is Dynavax. And we look at Dynavax, I said for this one, that this was one that we had this engulfing candle. So this is on 6/12 when I put out that video. And I said with that engulfing candle, it's highly likely that we start to see more of that bullish momentum take place. We're getting that golden cross moment right now. That is a very strong bullish signal that we have. Plus in the momentum territory, the RSI is above 50. We got the bullish engulfing candle. And then the very next day, we had a significant jump up from there, up 5.5%. And then I said that the momentum likely wasn't done. We got a day lag in between where possibly we saw more of a sell. And then when the market rallied, so did Dynavax, taking us up almost to $13 per share. As a matter of fact, the high hit $13.03. And I did say this is one that could max out at about $13.34, I'm sorry, is what we have about here at the top of these candles at this previous high. So around the 1330s, it looks like we'll likely get the momentum coming out of this very soon, being that we're starting to hit that overbought territory. So this one did play out very well. As a matter of fact, let's look and see from the time that I mentioned it until now. Let's do price range. And if I go from about where this closing price was up to this closing price, just to see over those 2 days, that's about 10% your money. So if you're talking about just swing trading that stock and just buying it and then keeping a hold of it, even just for the next few days, just that very short trade time that you have, 10% of your cash made for that trade. And so that's pretty incredible to watch that play out. So the two short plays haven't quite hit their moment yet. Dynavax being that long play has. So 10%. And if you were doing options on this one, only waiting 1, 2, 3 days, even that first day, we got 5% on your premium. that could be very significant. And then we had a large volume spike here, and now that volume starting to taper off. I think that some of the momentum is likely going to come out of this, and it is going to come back down. So if you're somebody who's an investor in Dynavax, for example, selling call options while that premium is high after that rapid climb that we have should spike that implied volatility, and so those premiums should be pretty expensive. Now, for somebody buying put options, hoping for the stock price to come down, they might be pretty expensive, and so you might not get that same access to return, especially with that time decay taking place with Dynavax. All right, so some of the more recent ones that I had. Let's go to DataDog, DDOG. There we go. When we look at DataDog, this one is still looking bullish. And so for this one, it did join the party. We had a 2% day yesterday, which might not be huge, but still we're shaping up. We had the golden cross moment. We are back down, not in overbought territory, but still in bullish territory for the RSI. We are likely going to see this thing break to the upside in the near term, assuming that the market goes along with it. If the market doesn't continue to show that strength, it is something that could fail to make this bullish pennant type look that we have here really play out for us. So we had a little bit of a consolidating period. It's kind of a funny shape, but I think overall this one still has that momentum to be able to push it up significantly higher from where it's at, possibly taking us up to $111 per share, maybe even if we get enough up to 118 coming from this. And I think that 118 to 120-ish has a decent likelihood from where we're at right now if we hit that next big run in DataDog. So that's a long play that hasn't quite taken its course yet, but could still possibly materialize for us, or it could possibly fail to materialize. And if it does, then we get stopped out. It depends on where you want to put that stop. If you want to play it tighter at about $94, $95 per share, or if you want to let it settle back down all the way, take a little bit more risk on. If you want to let it drop all the way down to something like $91 or $92 per share. And none of this is financial advice, of course. These are just ideas that I'm putting out there. All right, the next one I have for you is ADP, automatic data processing. And this one, I said, has yet to hit his golden cross moment. So this one's a little bit early stage in the game. Definitely want to keep your eye on. So we had this large red-bodied candle that we have here, where it just wasn't a great day for it, where we had a 2% drop, and then the very next day, 2.26% up, almost engulfing. It would have been nice if it would have been just a little bit higher, a little bit stronger of a finish to it. I still think, to me, that the fact that this green body candle is almost equal to what we have with the red body candle, that day before is canceled out price action-wise, and so this could be very good for us, that the fifth day is acting all the way going back to June the 5th as such incredible support for us. As long as we maintain that support, we're good. We do have, right now, we are coming right across these tops at resistance as expected. And it is possible, given this strength that we had yesterday, the fact that we're not overbought in the RSI, that we could come up to this 200-day simple moving average that we have up here. That's about 3% up from where it's at before we stumble. As a matter of fact, there's a little bit more to be found, maybe at about a little over 2.5% up from there. 2.5 to 3%, I'd say, is where we would next possibly get really stopped out by this previous historical price action that we have here and the moving average. Although I do believe this one's going to turn bullish on us, given the increase that we've had in strength in the RSI that we have here, that we're now above 50. If we can stay above 50, that's going to be a good thing. And we also want to stay below 70 for the time being, that slow, steady climb. And if we really see that golden cross moment coming up, this thing could really take off. So this could be a decent bullish swing trade play. Now, the last one that I have for you out of this list, and then I did say I would touch on SOFI and Tesla, is CrowdStrike, CRWD. CrowdStrike was also one that I had on my bullish list, and yesterday this thing started to break out for us, moving up, almost having a 4% day on decent volume, still not in the overbought territory. So this is one that has some momentum, and I'm in these pre-market hours. Right now, CrowdStrike is up another almost 2%, and so we'll see when the market opens if we're able to break up above this top. And if we are able to break up above that top, then we have significant amount of room to run. We still have room to up to about $168 per share, so several more percent to gain on top of that. So this momentum's a good thing. It does mean that we could possibly break out over this peak. So what I say, it's almost at 163. So right now, let's zoom in a little bit more. 162.76 right there. So in the pre-market hours, we are up above it. If we can open and really get some good volume moving up above that, then we could really break out of this pattern here, allowing that bullish pennant that we have to continue to play out, giving us a couple more percent, 3, 4, 5 more percent from where it currently closed yesterday in the market. And right now we're at, like I said, pre-market hours are already up about 2%. Overall market bias is going to influence that. All right, so let's go to our friend SOFI. Now, SOFI, I am an investor in this company, and I did, when this thing spiked up, this is an area where I said, this is a time that if you are an investor that you could sell calls on this thing. I did sell calls on this when this thing went up near $10 per share, figuring that it would come back down. Yesterday, it actually did, and I sold a put I attempted to sell puts, I should say, for 33 cents a piece with a $9 strike, which would take my cost basis for those shares down to $8.67 per piece, figuring that even if I did get assigned, and I did a one-day expiration, so even if I did get assigned to buy those shares today, then I would turn around and sell them back on the open market, or I could possibly decide just to keep a hold of them and deepen my investment that I have into SOFI. And I figured that was a fairly safe bet for me. I do think that SOFI could possibly see a little bit more weakness. As a matter of fact, today in the pre-market hours, and I do have over in the Discord, by the way, the way to access that Discord is through my Patreon. That link is down in the description. I was having a conversation with one of my Patreon members about SOFI, and we were both of the mind that this thing could go back down under $9 per share on us. So it is possible that we see a little bit of that softness come back, and you get this sort of sharp increase that we have here. It could have that significant pullback that we start to see around 830 to 850 before we start to maybe start that upward climb again, and we are in the overbought territory in the RSI. Again, overall market bias is going to have that influence on it, and I am a long investor in SOFI. I do want this company to go up over time, and I believe that it will go up over time. I think in the short term that I had an extended rally, and now it's time to rest a little bit before we start that next leg up, and I hope to be able to have a steep drop. Maybe today I'll make another run at selling those put options and capitalizing on the premium. And if I do get assigned to buy those shares, and that's a good thing for me because it allows me to get those shares at a lower cost basis. And well, that's something that I'll take any day of the week, to take a company that I already enjoy and buy them for less than what they're at in the market. So for example, people who were waiting for Tesla, this is actually a good segue to Tesla. I'll jump over to Tesla. People who are waiting for Tesla to hit 150 again. All the way back here when we're in these areas and they're like, 150, I'm a buyer. Well, this thing didn't hit 150. If we go to the low price, 152.37. So if they were to sell puts, for example, at this bottom, and there are risks to options. You should most definitely be well versed in options before you try and move into this sort of stuff. But this red candle day, for example, probably would have been a fairly nice day. Even this one back here would have been even better to sell those puts, because that's where you get those volatility spikes, which means the premiums go up. And if you're a seller that you receive those premiums instead of paying those premiums, that is absolutely a place you want to be in. And that means that you can get those Tesla shares possibly. Well, first of all, it doesn't guarantee that you get them. You just might get them. And it depends on a lot of things such as strike price, expiration date, also whether or not you get assigned to buy those. Well, that's a different story for a different time. This is a video about options, and I know I've gone on for a while. But either one of these places or any one of these times towards the bottom, if you were to sell those put options with that 150 strike, because that's where you're willing to be a buyer of those shares at 150. So sell that 150 strike. That means that you get those shares for less than $150 per piece. And it is in lot size of 100, so it takes a significant amount of capital. Plus, it's called a cash covered put. So that also means that the cash got to be there in your account before you're able to do it in the first place. So it does tie up some of your buying power. So there's some limitations, there's some risks, especially let's say that Tesla, instead of skyrocketing off like they had, that instead they fall down through the floor, down below $100 per share. Well, you're still obligated to pay that $150. So there is some risk that's involved in it. Tesla, I think, has a very similar story, chart-wise, technically speaking, to what we have for SOFI. Now, mind you, we got a golden cross moment coming up. So if this thing does show some weakness early on, I'm going to say early on, meaning in the next few days to next few weeks of trading, I'm going to say probably within the next week or two here, if we do see that weakness come back into it, that golden cross, I think, is something that's going to play out significantly for us, unless we get significant market turmoil where it's going to, if the market drops significantly, Tesla's also going to suffer. So it's just how it goes with the stocks, with the overall markets and their bias that they influence on individual stock prices. So just something to be aware of, and just taking a quick look at that path that Tesla's been on, and it's been a wild ride. And it'd be awesome to see them finally snap this downtrend that they're on. And they've gotten pretty darn close to it, to finally breaking out over that. If we came back and retested these previous peaks that we have around here, a triple tested 309, 310, where are we at here? 309 is about where this is right now. That would be absolutely incredible, especially breaking up above that. You could think about that as the next real area of challenge. So I do think that within 2023, assuming that the market doesn't go to crap for some reason, I think 2023 Tesla hits 300 at some point in time. I also do think that Tesla has a moment in it somewhere where we go back and we retest about that 230 level. So those are my thoughts that I have for these stocks. This is the Moomoo app that you're checking out. And remember that there is a link down in the description to get access to up to 17 free stocks. And the way that you get those free stocks is by making a deposit. Not only are you getting access to a wonderful trading app, but that $100 deposit or more, 5 free stocks, $100 cash reward. So there you have $200 worth of trading power just by depositing $100, plus a free share of C3AI, which C3AI yesterday had a great day. It is well over $40 per share at this point in time. Last I looked, I didn't update that check, but go ahead and check it out. So that's you put in $100, now you have about $240 worth of stuff. So moving on from there, $1,000, 16 free stocks, $100 cash reward, still yours. So $1,100 to trade with, plus your 16 free stocks. Do whatever the heck it is that you want with those stocks. $5,000 or more deposit, 16 free stocks, $100 cash reward. And then on top of that, they'll polish it off with 1 free share of Tesla or a share of Google, both incredible companies. And I think that they're absolutely worth having in your portfolio. So if you guys enjoyed my commentary and like to hear more of it, there's a link for the Patreon down in the description. Click it, sign up, get access to my Patreon exclusives, also access my private Discord where you can interact with me and my community members that are over there. We'd absolutely love to have you. Don't forget about that link for Moomoo. If you like this video, click like, subscribe, and ring that notification bell to see any time that my videos come out. I am Dr. Stock, Doctor of Education, and remember, learning is earning.